And I think that what it really comes down to is the markets hate uncertainty, but he needs the Fed and Powell to understand and believe that he's going to follow through with all of this. He doesn't mind if the market's down 10, 20, 30% here, because they're signaling that this is a period of transition.
James Lavish is breaking down the biggest economic and financial chess match happening right now. With tariffs, market uncertainty, and the ongoing battle between Trump and the Fed, what does it all mean for the economy, interest rates, and your investments? Lavish lays out why the markets hate uncertainty, how tariffs are rattling industries, and whether the Fed is playing a game of chicken with the White House. But the real question, how does this all play into inflation, the stock market, and the massive wave of debt that has to be refinanced? Lavish explains why rates will come down, why the Fed will eventually have to print again, and what smart investors should be watching right now. If you want to stay ahead of the curve, hit that like button and subscribe for more expert insights.
And what do you think of tariffs right now? I mean, do you think that this is a major upender to the economy? Is this a little bit of a sleight of hand where maybe they're not going to do, or it's not going to have as much impact as some are saying?
Yeah, I mean, it's a good question. If you look at the headlines here, there's a lot of headlines about tariffs. There's a lot of uncertainty about them. And that's probably the word that you want to use when you describe, the impact of tariffs. And I think that what it really comes down to is the markets hate uncertainty. And that's one part of it. So that's kind of affecting the markets on one part of it. The second part of it, and so the uncertainty is around, well, where will the tariffs be? How high will they be? How much could they and would they affect inflation, pricing of goods coming into the country? I mean, we're a net importer, so it's a big deal for all the prices to go up. So that's one side of it. The other side, and that's just the uncertainty part of it. The other side of it is, which feeds into it is, how much is Trump using these threats of tariffs as a big sword? Because he likes to use he's used tariffs as a threat before, and it remains to be seen how much this is a threat and how much he's really going to follow through on. I mean, one of the headlines that literally is coming across the tape as I'm talking to you is White House is saying that 25% steel and aluminum tariffs begin at midnight, and so. And that's coming into Canada, to your point here, talking about Canada. And so he wants to secure the border, and he wants to stop fentanyl from coming across the border. That is part of the excuse. I mean, the reality is we've had tens of millions of illegal immigrants pour into the country that were not vetted properly. We got to stop that. That's just not right. We've got, I'm all for immigration and all of that, and not to get political, and this country was formed on immigration. But you got to do it the right way, And so he's trying to stop that, and he's using we've seen him operate before. He can be less than politically tactful at times, right? But it can also be very effective. We've seen that too, especially in just business. But now he's doing it in Washington, and it's rattling cages, because it's just not the way that business is typically done in Washington. It's not the way that international relations are managed typically in DC. So that has a lot of people on edge, and they don't understand exactly what the impact is going to be. And he changes his mind like that, He could turn around and say, okay, we came up with a deal, no tariffs. And it's like, oh, wait, okay, so I was hedging against, possible steel and aluminum tariffs, and now I don't need to hedge against that because that's off the table. And then maybe it's back on the table. So it's like keeping people off kilter is kind of impacting the market. And that's probably the biggest impact of all of this, is just the uncertainty around it. Because once you get the certainty around it, well, people can position themselves. You can figure out exactly how to, the producers will figure out exactly what they need to do to get the goods at the best price that they can, and it'll either be passed on to the consumer, or it won't be. And I would think that the biggest threat, truly, Cedric, of tariffs that are followed through on, the biggest threat is for companies that just can't pass those prices along to their customer, and they wind up either either losing a lot of money and struggling for a while, or ultimately going out of business. And I guess that's the biggest, to me, that's the biggest worry in reality. The rest of it, there's a lot of noise and there's just a lot of uncertainty.
Yeah, I think when people say there's inflation in supply chains or supply chain breakdown, it's really just repricing up and down the line, and everyone trying to figure out, the inputs and the outputs of their new system and the new pricing.
Right. And then so people say, well, and I apologize, I don't remember who I was reading who said this a few days ago. It was somebody intelligent that I respect in the space, and they're saying that, look, and I think actually it was passed on by Anna Wong of Bloomberg, and she was saying that, look, the reality is that if the companies could pass on these higher prices to customers, they'd already have done it. So they're not going, and so that the threat is that they're not going to be able to, and then it disrupts their business. That's the biggest threat. I think that's the biggest negative, like real threat. That's more of a real threat than all of the other noise that we hear about it.
Yeah. Something else I've heard, maybe it was Bassett talk about sort of Main Street versus Wall Street. Mm-hmm. And, last term that Trump served as president, he was very keen about stock market and seeing it rise every day or talking about it weekly or monthly. He seems to not care as much right now about stock market. Do you think this is about Main Street versus Wall Street at all?
He cares. He cares a lot. He may be posturing that he doesn't, because again, he needs the Fed and the Treasury to believe, like he needs the Fed. Well, he's got Bessent, he's his appointee. But he needs the Fed and Powell to understand and believe that he's going to follow through with all of this. And meaning that he doesn't mind if the market's down 10, 20, 30% here, because they're signaling that this is a period of transition, that Wall Street may suffer a little bit in order to do the right thing, meaning make sure that they get inflation down, get that tackled, get interest rates down, and that will help Main Street. Well, how does that help Main Street? Well, first, there's two things, right? If interest rates are coming down, that's not great for banks, because banks need interest rates to be higher to have a spread, and that's how they'll make a lot of money, and that's how they'll make a lot of profits, and their margins on that spread. The higher the interest rates are, the more of a margin they can get on their products. For Main Street, and then for Wall Street, obviously, the market has been soft here. It's been struggling because of uncertainty and because of thoughts that we might be heading into a recession. And if that's really the case, then that's bad for Wall Street here. In short term, bad for Main Street. But in the long term, getting interest rates back down is this is what Trump's point is, that if he gets interest rates back down, then it's better for Main Street, because the cost of borrowing, which we live in a debt-laden society, the cost of borrowing goes down, and you can get that car loan for a lower price, lower monthly payment, because the interest rate is not 7%, but it's 4 or 5%, or it's not 8 or 9%. And then the same thing with houses, instead of having your mortgage up at 6.5%, maybe it's down around 4.5%, and that's means that it opens the door for people to buy houses whereas they might not have been able to before. That's the idea. Whether it comes to fruition, we'll see. But right now, it seems like they're willing to stomach this for a little while, to allow for the market to have a breather, and hopefully not tank. But the Fed needs the market strong. They may say that they don't care about the stock market, they're not in the business of managing the stock market and all of that. But the reality is that we're in a highly financialized system here. And if the stock market is down 20 or 30%, that will impact all markets, and it will not be good for the Fed ultimately. And so, because ultimately it's not great for the Treasury. So the Treasury needs to be floating a lot of bonds, and so we've got to reissue upwards of $10 trillion of bonds this year, in the next year, not this year, but in the next year. And so we can't have such strong softness in the market and an economy that's that's tanking because we have to borrow more, and so that would be problematic. And you don't want your revenues to go down as GDP goes down because of some sort of recession. Then you're just gonna that gap that we're running a deficit just grows. And regardless of what Doge does, that deficit will blow away what Doge is doing right now. And so that's the problem. And they need to manage around that is the way I see it. And ultimately, I believe that Trump does care where the market is. He ultimately does care, whether or not he's making his Wall Street buddies and colleagues rich, and whether they love him. And it's been his benchmark for the last administration, and I would bet that it's going to be a benchmark for him again.
Is this a game of Trump playing chicken with the Fed and Powell?
It might be a little bit of a game of chicken because Powell said that he doesn't care. He's not going to do what Trump asks him to do. He's going to wait. He said he's not concerned about the economy yet. He's not. He said he's not concerned with where the stock market is, and so it is a little bit of a game of chicken, I believe, like you said, with Trump, and we'll see who wins. I don't know. I think that Trump is he's going to hold strong here for a little bit. We're seeing the market react negatively to it, and so we'll see where we shake out. But ultimately, rates will come down. The Fed will stop whatever minuscule QT that they're doing, and ultimately, or eventually, they'll have to print again. That's just math.